Okay, welcome everyone. Thank you so much for joining us today. We have a very special fireside chat with three of the top climate tech investors in Australia. I look at some of their profiles and it's just like full of investor in climate tech. So I'm really excited to be talking to three of these gentlemen today. For those of you who don't know me, my name is Cheryl Mack. I am the co-founder and CEO of Aussie Angels, and we run a platform that supports angels to run their own angel syndicate. Today, we're going to be talking to one of our syndicates, which is Electrifi Ventures. It was founded by Danin Kahn, who is here today, and also has Alex Aboitiz on the advisory team, as well as Simon Monk as well, who are both here today with us. We are going
to... Thanks for joining.
Thanks, Danin. So we're going to go through a couple of questions. I've got lots of questions for them, and we're going to give you a chance to ask them questions as well. You can ask them about, their investment, their portfolio strategy, anything you want. If you want to ask a question, feel free to just put your hand up, or if you're not able to come off mute today and you just want to pop it in the chat, please feel free to do that as well, and I will read it out to them. We'll have a dedicated section for questions at the end. So, Danin, let's start with you. Can you tell us a little bit about your background? You founded several companies, but I'm probably most interested in today because I think it's kind of interesting that you didn't really have a background in, sustainability at all. And then you went and started this eco company.
Yeah, sure. So first, thank you for doing the session. It's really exciting. It's great to have all these people here. Thanks everyone for joining. So I've been a bit of a serial entrepreneur. I guess before today, I actually started my first venture. I wouldn't be what's classified as a venture today, but I started my first business when I was actually at school. So me and a friend of mine would go and we'd get to school, we'd go out and we'd actually go, and it was events, and we'd actually go and find venues and do all this work for our business while we were at school, come back to school, get dropped off, and that was it. So I've always been entrepreneurial. Started a business in the .com stage, had a really good exit there. And then, as you said, went to the Today business, which at the time it was called, it wasn't called climate, it was called eco. So it was really eco or sustainability. And I spent a year traveling after I exited the glass onion business. I really wanted to get into sustainability or something environmental. And I spent a year traveling in Europe, just thinking and looking around for business ideas and seeing what I could do. Came up with about 30 different ideas and ended up landing on an eco store, which was a store selling sustainability products because I was looking for this stuff myself and couldn't find it. So I ended up building what was Australia's largest online retailer of eco products, everything from solar to lighting, all the rest of it. Opened 2 physical stores. They didn't work, closed them pretty quickly, but built this business. And then while I was doing that, started a solar business. So that's sort of where I got into sustainability. So that was sort of mid-2000s. And then from that point, built out what was Australia's largest commercial solar company. And then I guess just to fill in some other gaps, since then, that actually had what I call an epic failure. So some really great learnings out of that. Very close to an exit, had 50 mil plus of turnover, over 100 staff. So bit of a challenging time, but as I mentioned, a lot of learnings. And then since then, I've been sort of consulting and advising in the energy transition space around go-to-market, growth, strategy, and then now working in startups in this space.
Awesome. And really excited to be working with you on this. Simon, will you tell us a bit more about your background and some of the exciting things you've done?
Sure. My background is actually product design, so I'm quite product-centric rather than finance-centric. I come across actually a travel business online right back in the 90s. Did an exit there. Learned a lot about marketing and business and P&Ls and all the other good stuff about growing business. And then I've been looking, I was looking for a new venture, a new direction, and climate was obviously it. And that started obviously with solar, and then sort of the realization that it wasn't actually about solar, it was this whole energy transition driven by climate, amongst other things, was going to happen. And I've been looking at and investing in businesses in that space, and only that space, for about 6 or 7 years. Learned a lot. I'll share some of the learnings as we go through it. Some of the examples, I think Danin wanted some examples. I mean, two of the most recent examples are things like MGA Thermal, based up in Newcastle, sort of modular thermal energy storage company. They've got very interesting industry hypothesis, I suppose. And down in Melbourne, there was one called Conritech, who's trying to reinvent the HVAC for large buildings on the premise that if you can reduce energy consumption by 60%, there's a significant market for that. So,
Awesome. Thanks. I think it's interesting that both of you actually got into this like climate space from the pathway of solar. So I think that's kind of like an easy entry point for a lot of people to understand, but then expand so much wider out from that.
Yeah, it used to be called clean tech. So
are we not using clean tech anymore?
Some people still use it, but I think it's just been absorbed into climate.
Ah, okay.
Not as sexy as climate.
Alex, tell us a bit more about you.
Hi, everybody. Yeah, so my background, I guess, is slightly different from Danin and Simon. I sort of made my first foray into the tech world back in 2000, so almost a generation ago, where I was at Stanford Business School and I dropped out to help start up a company in Latin America called Mercado Libre, which is sort of like an eBay / PayPal / Amazon for the region. So long story short, that ended up being relatively successful. So it allowed me to, I was working at Amazon at the time after a couple of years at Mercado Libre. And once Mercado Libre went public, I was able to say to my boss at Amazon, thank you for everything, and I'm done. And that took me into the world of investing. So I was what you would probably describe as a more traditional sort of tech investor, both in venture capital firms throughout Latin America and in Australia when I moved here about 10 years ago. And I also was doing quite a bit of angel investing in the tech space. And I had my sort of come to Jesus moment about climate tech, probably around, I think it was around 2018 or 2019. And ever since then, I've tried to focus my investments only on climate tech.
So you were investing in other areas before climate tech, Alex?
Yep, that's right. That's right. I was a pretty active angel investor in sort of broader tech.
Yeah. And Simon, have you made any investments outside of climate tech, or is it only that?
a handful of angel ones.
Yeah, okay.
I don't have to think too hard. So it's small enough, you're going, that's worth a punt. But, if you're going to do due diligence, it takes time. And you've got to pick your targets carefully, and you can only do so many. So,
Yeah. And Danin, why did you start angel investing?
I've always been entrepreneurial. I wanted to get back into like when I finished up at Today's Solar, I started consulting for larger companies. So companies that have sort of 20 mil plus of revenue. It was great. The work I was doing was really great. And I still do some of that. Very strategic, but I wanted to get back into the entrepreneurial ecosystem and found that a great way to do it was to sort of connect with companies via advising them, but also investing. And also, I guess part of it is just to, I'd had an experience where I'd spent over a decade working in a single company, building value. It was incredible, but companies can fail. And I also just didn't want to put all my eggs in one basket. So for me now, it's great. I'm backing a whole lot of other aspiring founders doing their thing. And so just purely from a financial perspective, it's diversifying that and just really wanted to sort of put back into the ecosystem, not just with effort and expertise, but financially.
And Alex and Simon, you've also got a number of investments under your belt. What are you excited about for the next 12 months?
Alex?
Gosh, there's a lot, to be excited about. I guess some of the investments, look, the beauty of climate tech is that it's very broad, right? So there's a wide range of investments that you can look at that, can be of interest. I mean, in particular, batteries is one. There's a lot of interesting companies trying to sort of continue to push batteries down the cost curve. A sort of crazy one, but super exciting and sort of freaky to some people is a company called Vow Foods that basically creates meat in a laboratory. So it's sort of like creating meat without the animal, which is pretty far away. It's going to be a long journey, but that's a really solid team. They're raising a lot of money and they're really sort of showing these steps of progress moving forward. So there really is lots of interesting stuff out there. SunDrive, sorry, one more. That's a super interesting one. They're trying to build sort of very efficient and relatively cheap solar panels here in Australia. That's another company that's well backed, super exciting team. So there's a lot to talk about, Cheryl.
Yeah, from my perspective, there's obviously hardware companies, but there's also services which are just beginning to appear, particularly around energy and demand response. There's a whole bunch of small companies working, overlapping in what they do. Demand response is basically putting energy back to the grid, so it's stored in. So it could be a fleet of EVs. It's really interesting trials going on at a federal level where you're taking some EVs, making them biodirectionally charged, and then actually feeding that back into the network. So one of the key things that I always look at when I look at a venture is, does it scale? And if it can't scale, I'm actually not that interested. So it doesn't mean it's not valuable from an individual company perspective, but I'm actually after the ones that, if they're successful and if they're proven, they could scale globally.
Yeah, absolutely. And we'll come back and talk a little bit more about the investment thesis here as well. Danin, maybe you could share a couple of your portfolio companies and also talk a little bit about how you got access to them.
Yeah, sure. So, I mean, I haven't been doing this as long as Alex and Simon, but I've got a few. So I've made probably around 8 to 10 investments so far. And actually, I found it really difficult, to be honest. And this is part of one of the reasons why I'm doing this is it was just hard to get access to good companies if you don't have those networks or you don't have that track record. So one of the ways I did is actually I made an investment into a carbon company on one of the syndicates on Aussie Angels a little while ago, which was great. And it was just, that was sort of closer towards when I was starting this process. And it was just an easy way to get in, to find a company. Someone else had done all that DD, so it was great. I could just piggyback off that. One of the early investments I made was in a company called Orchestra. I had to really hustle to get in there. It's a B2B software platform for battery and energy storage simulations. That was funded by, well backed by Tidal and Yajalara family office. Had to really work hard. They're going to go out and raise some capital as well. And then one of the ones I'm quite proud of, it's a newer investment, but going really well. Like had significant uplift on since I've got in there. It's sort of a pre-seed stage. There's a company called NRN that is building out first in Australia, but going to go global, building out a network, a huge aggregated network, like virtual power plant of solar and batteries behind the meter that they're providing to homeowners at no cost at all. So there's no cost. They basically get the energy retailers to pay them, and the energy retailers then go and give customers a discount. So I've also helped them at an advisory level, really help work on their strategy. And there's been significant interest in that globally from an investment perspective. So very exciting, just some great stuff.
Yeah, I love that concept of you really have to hustle in those early days. I was the same way, and breaking down those barriers for other people to be able to take advantage, I think is really important. So I'm really glad that, the three of you are working on this and Danin, you're kind of leading the way with Electrifi Ventures. Alex, maybe you could talk a bit about some of the earlier investments that you got into and, and how are you helpful as an operator angel?
Yeah, sure. So yeah, from a sort of clean tech perspective, I've probably made, I think, about 15 or 20 different sort of, angel investments, usually very early stage. And the more promising ones I tend to follow on, in the subsequent stages. So I'm not an expert really in pretty much any of what these companies do, but I have been on both sides of the table, right? So I've been a pretty active angel investor. I've seen a lot of venture capital firms and how they operate. And I also had, the good fortune of working at Mercado Libre and raising money for them and doing sort of finance and strategy for them. So hopefully I can bring some value to my portfolio companies in helping them sit down and think about sort of the next stages of funding and what the process should look like and how I can help with that.
And Simon, why should companies bring you on?
Well, I built my own business, obviously, and I know what an exit looks like and how challenging it can be to sort of keep a business growing in the right direction when you're trying to do an exit. I'm pretty well connected. I'm a big networker, and it isn't really about connecting everybody. It's connecting a handful of people who can really add value. Appropriateness, as you'd be aware. So.
Yeah, definitely all underselling yourselves for anyone listening. They're yes, these three are amazing and angels and very helpful and underselling themselves right now. Danin, maybe tell us a bit, why did you decide to start an angel syndicate other than providing others with access similar to what you were hoping for?
Yeah, so as I've shared in part of my background, I'm very, very passionate about climate and sustainability. Have been for now like getting on to 20 years and actively, dedicating my whole career to it. So I believe, very passionately that we really need to accelerate the rate of change to mitigate climate change. And I'm also a very passionate entrepreneur, as I mentioned. So it's just a really good mix. And by getting into angel investing and trying to run the syndicate, I think it's stimulating the ecosystem to drive more capital into startups, and not just capital, great people, great networks, all that sort of stuff. So we're going to need thousands and thousands and thousands of businesses starting up if we're really going to start to make a dent here. So that's the driver. And I think it's also, I'm unashamedly happy to say that I think it's just a great financial and investment opportunity. Like if you look at the likes of Bill Gates and world leading investment experts, most people see the next revolution of, wealth created in climate, because we don't have a choice. We have to change. And there's so much more industry that needs to be built and so much more capital that needs to flow through the system. So to me, it's absolutely the place to be. There's significant tailwinds, regardless of the economic scenario.
Simon, you look like you wanted to say something there.
Yeah, I was just going to add one thing to that. And that's, Australia's, because it's been doing solar for 20 plus years, and the energy transition here, despite the politics of it, we're actually ahead of the curve. We're an advanced country trying to transition a relatively small base. Seems a lot to Australia, but in the global context, it's relatively small. And all the learnings that we learn here can actually be applied globally.
What do you think that means for the future of this space? Are we going to come out ahead? And if so, how?
I just think it means that Australia can prove systems. It invest in to try stuff out before taking it home again. 5B springs to mind. So you've got a modular solar deployment company with big investors in the US, and they're actually trying to grow a system that, if it works, you could scale that out, particularly in Europe and America. Which is obviously where the big opportunities are, because their problems are 10 times bigger than ours. Just by one example. SunDrive's another one, which Alex has mentioned. There's not enough silver in the world to produce all the solar that we need. That's their hypothesis. So that they've invented an industrial process that can use copper instead. And pre-Ukraine, the challenge was going to be, well, how do you commercialize it? But post-Ukraine, the issues aren't just economic, they're strategic. Energy security springs to mind. So, there's all sorts of tailwinds, which Alex alluded to and Dan alluded to that are supporting all these innovative companies.
Cheryl, just jumping back in there, coming back to your question. So in terms of the driver for, can you hear me? Yep, cool.
Yeah.
I guess the driver for that was around proliferating the industry and really proliferating the growth and the groundswell in climate startups to solve the problem. In terms of why the syndicate and what that's going to bring to the table to investors is it just provides access to deal flow that's really, really hard to get. It enables investors with small amounts of money. When I say investors, that could be anyone, right? You don't need to think of yourself as an investor. You don't need to be actively working as an investor. It's anyone with a little bit of money, right, that can go and put their money to good work, do something good, but also get a good return. So we're going to go out and source these opportunities. There's a really good track record between us of being able to find these opportunities, right? Being able to provide access to anyone in the syndicate to get into these deals that are hard to get into. And often, like Simon mentioned, companies like MGA Thermal, one of his investments, they're they've just done a round of capital, and the entry level, even if you did call them up and you knew they were raising capital, the entry level is going to be at least $200,000-300,000. I don't know specifically, I'm just assuming, right? That's definitely a check size that's a lot larger than most people are going to be comfortable writing, right? And so for us to look at taking an active slice of that, a decent slice of that, and then divvying that up amongst investors, it gives access to people that might want to write a $10,000 check into a company that's on a really good trajectory, that's, you know, that's proven that they just wouldn't get into before. So that's, I think that's really important to know.
Yeah, absolutely. So talking a little bit more about like great deal flow, where are you finding it? How are you getting access to this great deal flow?
Professional networks. So I think the three of us have been in the industry for a while. Lots of professional networks, referrals from founders, which is a really strong one. That's hard to get. But when a founder says to, you know, another founder, this is who I've worked with, that's really, really powerful, especially in deals that are hard to get into. Inbound inquiries. So just all the hard work that's been done over the last couple of years building this out. We're actually starting to get quite a bit of inbound inquiries now. Lots of work mentoring and participating in accelerator programs and these sorts of things. And it's not that hard to do, but it just takes a lot of time. It really takes, like, I mean, you know, you've been doing it for a while. It's a substantial time commitment, right? A lot of these events happen at night. If you've got families, they're hard to go to. So that's one. And then referrals from other investors. Just a good example. A couple of days ago, I've been building relationships with overseas investors, US investors, this sort of stuff. I was in Silicon Valley about a month ago, had a meeting with one of the funds that we've been having some discussions with. And I got pinged from them saying, hey, we've just seen a really good investment in Australia. We really like it. What's your thoughts? Can I introduce you? So that was an introduction that came through a US fund for an Australian startup. So there's some of the areas where deal flow is generated.
Awesome. Yes, can confirm it is a lot of work. I'm sure Alex and Simon, you would agree as well. Let's talk a little bit about your investment strategy and what do you look for in founders?
Sure. So in terms of people, for me, and Alex and Simon can answer this, but for me, it's really hustle, it's passion, it's having a good strategic handle, a good strategic vision. Resilience is really, really important. Adaptability, like change is inevitable, setbacks are inevitable, you know, all these things are going to happen. So how well you can adapt to that, and then how well you can execute. Can you actually go out and execute on a plan? Alex, Simon, did you want to add to that?
No, I don't think there's too much more to add. I mean, I think adaptability is absolutely key, like you say, Danin. You know, the only thing that's constant is change. Things will definitely change. Maybe passion as well. You know, it's also very useful to find someone who's just willing to, you know, knock down doors and to be very passionate about sort of the project they're in. So yeah, wouldn't add much more.
Yeah, I mean, I would actually not. I would sort of one of the first questions I ask is, do I like their idea? Most businesses actually have an idea or concept that they're busy building, and obviously the great team, you do look at the team, but you can have a great team and a poor idea, and you know that may not scale. So I actually start with the product and where they're trying to take it. One of the other things I've noticed is that sometimes you can get sent a pitch deck. The pitch deck's pretty lousy, and you almost just shrug and just go, well, that's not very interesting. But if you actually go and speak to the founders themselves, well, often they're highly articulate and they've got some really good insights into their area of work. And it's just like, oh, there is actually something here. It's quite interesting. Got to speak to people.
Yeah, I'm with you on the pitch deck. It's hard not to judge that, but sometimes you got to move past it. What about your investment strategy in general? Like, what types of companies are you looking for in terms of like industry, stage, sector?
Yeah, so sectors, let's start with that. Sectors broader climate, which people ask, what is climate? And it basically is like businesses that will have a substantial impact, a substantial environmental impact. That might not necessarily translate to carbon specifically. It could be about biodiversity, Could be about a whole bunch of other metrics. Typically, carbon's an easy one. It's quite easy to measure, but companies that are out there that have a focus on having some sort of climate impact. Now, that could be it could be a combination of a fintech and a climate tech play. It could be an ed tech and a climate tech play. You know, it could be something about education that is teaching kids about climate. It could be anything. So it's pretty broad, not just energy. In terms of the strategy, you know, as Simon said before, I mean, there's good investments, but we're looking for venture scale investments. So investments that can, you know, several X themselves over the next few years. Hyper ambitious founders and the ability to really go global, because obviously everything we do counts. And, you know, taking the attitude of, oh, well, we're in Australia, it's a small country, what can we do? That's just not acceptable, right? Everyone has to do everything. But if we can not just impact Australia, but we can impact globally, not only from a client perspective, is that where like it's creating the impact that we really need, but also from a financial perspective, that's where the real opportunity is. One thing I'll quickly add, and you asked around access to deals earlier. What I'm seeing is as the markets have shifted over the last couple of years, and the sort of supply-demand balance has shifted where it's people aren't just throwing money into things willy-nilly, there's a bit more diligence going on. It gives time to do more due diligence as from the syndicate perspective. And I'm really looking like the first deal we're going to launch, like I've done well over 6 months due diligence on this company, probably close to now 9 months working with the founder, understanding it. And so I think that's it's a real value add if we can. And as sort of the balance comes back into play and companies expect investors to do more diligence on them and expect longer runways for investment, all that stuff, we can dig much deeper and really stress test all those traits that we spoke about before, especially things like execution, because from a meeting, you could pick up hustle, you could pick up strategic vision, all that sort of stuff, but execution comes over time, right? So you got to be able to see that. So these are all factors that play into it. And I think it's a good market for investors now, like valuations are at a reasonable point. There's good opportunities. It's people aren't just throwing money into stuff stupidly. So I think it's a great time to invest.
I would absolutely agree. And it's funny you say like people kind of think, well, climate for sure. But I know you kind of went back and forth on the Electrifi Ventures name. So I know you're kind of thinking that could be two pigeonholes and you wanted to make sure it was really expanded.
Yeah. So initially I set out to just look at the energy transition, and you know, most people who understand what's going on here know that we have to electrify everything: households, transport, industry, shipping, aviation, everything, you know, agriculture, everything has to be electrified to reach where we need to reach. And so that's sort of where the name came from. But then when I started going out and spending time with and meeting great startups, and I went, they're not actually about electrification, they're climate, they're doing some really cool stuff. And I thought, well, we still want to be able to invest in that. That's a great team. That's a great solution. It's doing something. And so just for everyone on the call here, I actually called Cheryl and said, hey, I'm thinking of changing the name. It doesn't sort of capture everything we do. And she's like, no, it's a great name. You got to stick with it. And so I put that out to a few people and people like the name, and it's, you know, I'm really happy with it. So we just stuck with it. So that's where the name is. So it shifted. What shifted was the focus being, I guess, electrification and energy to broader climate, which I'm really happy with. And the other thing that shifted is, and this kind of dovetails back into maybe some of the deal access side of things. The other thing that shifted was a focus on pre-seed and seed. So this is really early stage, often unproven, pre-revenue, possibly even pre-product market fit, to looking at a broader remit going to Series A. And the reason to go to Series A is that example I gave before around MGA thermal as a hypothetical example, where we'll be able to provide access to investors to deals that are bigger and more established, and, you know, on a more proven trajectory. Yes, it's a higher valuation, so you get a smaller percentage, but you get in, you get access. So that's why we've stretched it out to Series A. And then I'll throw in there as well one of the other ideas we're looking at, and I know you've done this recently as well, Cheryl, on your syndicate, but is even providing access to some global funds. So some really, some very large global funds that are absolutely kicking ass and have some incredible global players in their portfolio, and even providing investors with checks as small as even 10K to be able to get into those funds where, typically you might have to write a $5 million check to get in there.
Yeah, definitely don't have that 5 mil check. And you heard it here first, everyone. We have to electrify everything. Alex, we have a question for you on the chat here. I'm not sure if you had a chance to read it, but with regards to energy storage, where do you see the opportunity for innovation with regards to battery innovation? Is it upstream on the chemical or fuel cell manufacturing?
Well, thanks for the question, Pavina. So look, I think again, let me just start off by saying I'm not a battery expert. I think that there are opportunities probably throughout most of the value add chain. If I think about the investments that I've made specifically in this space, there are three of them. One is Sakona Batteries, and what they're trying to do is basically sort of a chemical innovation. So instead of just using lithium ion, they're trying to use a silicon graphite combination for the anode. And of course, early days, but they're moving forward in that process. There's another company called Novalith. That is a little further back in the value chain. They're all about making lithium processing more efficient and less damaging from a climate perspective. They just received funding from lowercase capital out of the US. They're an Aussie company. And that's one where the founder of Sakona introduced me to the founder of Novalith. So another, as Danin was saying earlier, that's a great deal source. When founders recommend you to other founders, is really not much better. And then I have a crazy one, which I love. I like it because I'm pretty undisciplined. Now it's going to be great working with Danin and Simon. That will probably help me focus a little bit. But I came across this company in New Zealand called Energy Bank. So what they're trying to do is build a gravity battery, right? So no chemical. It's just the difference in potential energy from up and down. So sort of like hydro, if you will, but they're trying to do that underwater, which brings a lot of challenges with it, but it's something that could dovetail very nicely with offshore wind farms, right? So the idea being, when there's a lot of excess energy, you can move these weights up at the top of the water, and then when you need electricity, you drop them, and that spins a turbine. So it's another sort of source of storage. So I've made a variety of investments in different parts sort of the value chain. I don't really have a clear idea of who the winner is going to be yet, but I think reflecting a bit something that Danin was saying earlier, we're going to need innovation in all levels, right, and in all areas. So it's a very sort of fertile ground for investing.
Yeah, we're going to electrify everyking. Can you talk?
We have to.
Yeah, I love it. That should be your new tagline: electrify everything. Can you talk a bit about the opportunity that you see in the carbon markets? I know we just had our new Labour Party that was elected, and they've got a carbon market solution that has been announced. Is that going to create opportunity, or do you think there's fungibility with global markets?
I'm personally not an expert here, so I might pop it to the others. I will say that everything, like every aspect of climate, and we mentioned earlier that carbon is going to have to come into play. And one of those investments that I mentioned, Carbon Asset Solutions, is doing that. It's sort of carbon through soils. We had a company here, Loam Bio, which I think started in 2021. And I don't have the figures in front of me, so I could be slightly out, but they've just raised over $100 million starting 2 years ago. And they're looking at that. That's just around soil carbon. But Simon, Alex, any thoughts on carbon market there?
Yeah, I've looked at some of the fungible tokens from a carbon perspective, but the ones that interest me the most are the ones that actually measure and report on carbon in a intelligent manner using AI and data that already exists. The hypothesis there is that large companies in particular are going to have to reduce their carbon footprint, and they actually need to start by understanding what that footprint is in order to produce it. And there's some really interesting tech in that space. Fintech, effectively. Which isn't quite the same thing as the carbon market, obviously.
We're going to keep going through the questions here. So again, if you have a question, feel free to pop it in the chat, or you're also welcome to put your hand up if you want to ask them directly, and I'll just unmute you. Cool. So when reviewing early stage climate tech companies, where execution technology and revenue metrics might be too early to validate? What are the other potential impact metrics that you look at?
Cool. I'm happy to go first here. So for me, it's going to be around a plan. Right? What is the plan, and how capable is the team of executing on that plan? And so if it's too early for even technology or revenue metrics, there should be a clear plan on how that team's going to get there, what they're going to do to get there, the team they're going to need to build to get there, the amount of capital they're going to need. And it's just getting a level of confidence that they can do that. And then on the other side, you've got to marry the market opportunity. So is there a big enough, if they do get there, is the market opportunity big enough? And that's where a lot of pre-seed investment happens, where it is going to be, potentially pre-product market fit, meaning they've got a product that they know customers want and customers are happy to pay for. So yeah, I guess that's really early stage investing, and you're betting on the fact that the plan will work, or the team will be able to get there. And if the plan doesn't work, the team is agile enough, and this is what we spoke about before about adaptability. The team is agile enough and effective enough to find a way around that, or to find a way to pivot the business to still achieve the overall goals and objectives.
Alex, Simon, anything to add there?
Yeah, product market fit and revenue. I mean, many of these startups are unproven. Most, I'm trying to think of any that are, some have revenue. Good revenue, but aren't necessarily profitable. Others don't have revenue, and the product isn't yet proven. But you need to make an assessment that they have a trajectory and an insight that and a pathway and sufficient funds that if they execute well, then they can actually achieve that pathway. And that's why it isn't really just about revenue. It's about trying to align their technology, whatever it is, their vision, and the finances of the business and the founders. Can they actually all go down the path at the same time? And that would apply even to quite large companies funding Series A and Series B.
Awesome. And we also were just building on our other question around the CDR solutions. If you have any views on those, I actually don't know what CDR is. So I'm hoping you guys know that.
Yeah, that wouldn't be my area of expertise. Sorry.
Okay. Cool. So question from Vinko, just how to think through early stage in climate tech startups, which are often capital intensive. So they're using a lot more CapEx, more than just like bites of deep tech and hardware startups. Is it easy to think, A, the capital required is too great for me to make any difference as an angel, and B, the payback cycle might be too long. So, if it's going to be more than 10 years to exit, and they often need a lot of support and leverage where maybe you don't have, or we don't have as much expertise. So this might dissuade angels from getting involved. What are your thoughts on this? Do you think it's the wrong perspective?
Yeah, I mean, if you look at, the traditional VC venture capital industry that's been built up, it's like the model is scalable software. You put all this money into something, you build something, you lose money for several years while you build it, but then when customers take it up, it's almost zero the incremental cost per customer is almost zero. And that's where the uptick you get is, and that's the model typically Silicon Valley has loved and looked for. But when we spoke about earlier the electrification of everything and the fact that we have to make some of these changes, like electrons do require hardware, right? Stuff moves around, cars move around, planes move around, soils are there, like they're physical. So there's no way of solving the problem just with software, right? It's a key part of it, right? But we have to have hardware. So we're seeing a lot of really, really exciting stuff in hardware and deep tech. And I think the market is adapting. This is an opportunity for us to get angels into something where a VC might have a mandate to say, we can't invest in something because we don't invest in hardware. That's a great opportunity for an angel syndicate to go, screw that. Like, that VC industry is completely disruptible. Yeah, these are like rules that have been kind of built in there for a few decades, and it is changing. But yeah, angels should be the ones coming in, disrupting that and going, why not? Why not invest in hardware? Yes, it's capital intensive, but you can look at non-dilutive solutions like debt and other factors. In fact, one of the businesses that I'm working with is it's a huge software and platform play, but it's very hardware intensive. And part of the work that we've had to do is find a way to scale the hardware side of things. So it's a great problem to solve, and it's an essential problem to solve. It's not going to stop things.
Simon, Alex?
Yeah, I think the only thing I would add to that, I mean, I do think it's a valid concern. But the way I sort of view it is, we are going to help shepherd some of these companies to their larger rounds of financing effectively, right? So a bit the essence of the question is, can we fund all of this sort of ourselves, especially these hardware companies? And the answer is definitely no, but we can definitely help these companies pass sort of the chasm of death and reach the point where they have enough traction to be able to go out and raise those larger rounds of financing. And like Danin says, it sort of ironically becomes an opportunity because there are not too many people looking at companies like that. And many folks, sort of the more traditional VCs, are scared of that, really.
Yeah, I'd agree with Alex. The other thing I would add is that if you looked at the climate tech space over the last 6 to 7 years and how far it's moved, and then you project forward to 2030, which is only 7 years away, it will move even further in the next 7 years. So whilst most business horizons in this space are going to be 10 years at least, long-term plays, to be really successful, so I lost my train of thought there, but it will actually happen by 2030. A lot of business drivers from corporates in particular will actually make this an absolute necessity.
And don't we have targets that we have to meet by 2030 as well that will contribute to that?
Mm-hmm.
One particular insight at a conference, an arena conference last year, actually, was I won't name the bank, but it was a senior director of the bank, and she basically said that there's directors in all of these banks and big institutions and publicly listed companies that have made public commitments to targets for 2030, and at the moment they're not going fast enough. And about her view was that by about 2026, 2027, there's going to be wild panic as they actually realize that they will be liable for those comments.
It's like the kid in college who puts off everything until the very last minute, and then they do an all-nighter, right?
This is the last night. I mean, in terms of like how it's been going over the last couple of hundred years, like this is it. This is the 11th hour.
Yeah, so we all got to pull all-nighters to electrify everything. Got it.
Exactly.
Oh, and Danin, we did get 3 votes on your name being a thumbs up. So I think we definitely need to stick with it.
Right. I was sticking with it. It's done.
Perfect. Well, it's good to get back up on it as well.
Yeah, absolutely. Thanks.
What about from an angel perspective? Is there any preference around B2B or B2C, or looking at everything?
Everything. Yeah.
Awesome. I like everything. Cool. And there is a little bit of a debate on what CDR means in the chat. I think we're settled on CDR being carbon dioxide removal. So I learned something today. Thank you, everyone. And in general with the syndicate, so we've been talking to angels today about what you're investing in. We do have the syndicate, and I believe you have opened that up to anyone who wants to apply to join. I've dropped the link in the chat. But are there any other requirements to join the syndicate?
Obviously, from a compliance perspective, you need to be a sophisticated investor. So probably better you talking about that than me. But no, other than that, we're just looking for people who would genuinely want to explore opportunities. There's no obligation by joining. There's no obligation to invest in anything. It just gives you access to the deals. We'll package them up really nicely. You can be very comfortable that there's a lot of effort that's gone into them. So any deal that's put forward, there is significant effort. In fact, myself, Alex and Simon had one that, we deliberated over. A lot of DD had been done. Two of us decided we didn't want to proceed with it, and we chose not to after a significant amount of work. Now, that's something that we may put personal cash into, but not take to a syndicate, because if we're asking people to invest in it, we've got to be absolutely sure. And that's the beauty of, I guess, having a team with all this experience and track record. So, all that work culminates back into experience, but I guess that's the value that we're bringing. Whereas someone else may have gone out there, had a quick look at something, and gone, yeah, that feels good, let me just throw some money into it. So yeah, no obligation, just access to really good deal flow, really exciting deals. You get to meet the founders. So when we run each deal, we'll have a session, a Q&A, and a presentation from the founder. And there's also opportunities to get actively involved. Startups need as much support as they can get. And so people who have expertise, they can invest, and they might be able to help these businesses in a way that they feel they can add value.
For angels who are thinking about possibly joining, what makes your syndicate unique?
Yeah, good question. I think there's a real dedication to do this. It's not just a side hustle or a quick thing on the side. Like, this is going to be built into something big and exciting. And it's going to be built into something really professional. Lots of innovation is going to go into it. So for me, I actually treat this as a startup, right? Although it doesn't have a specific product, like a piece of, like an app or a whatever, maybe it will one day, but it is a business. And so this is the starting point of this business, building these opportunities for people. I've put a lot of effort and spoken to a lot of people, as you know, Cheryl and Vince. I've reached out to both of you around, several months ago around who would be great advisors to have on this. I spoke to a lot of people, and at this stage, and I invited both Alex and Simon just because of their amazing track record, the like-mindedness we had, and just the ability to really add value. So I think just bringing an experienced IC or investment committee adds a huge amount of value. The fact that, we've got real actual startup experience, running businesses, selling businesses, working in larger corporates. So there's real value. There's real strong advisory skills, and it adds a lot of value to both investors and startups, like real tangible value. We founded companies, we've had some good exits, had some epic failures, as I mentioned. Global access. I think this is from me talking to angels on a regular basis. It's great to support the local ecosystem, and we're very passionate about that. But that shouldn't mean that you can't look at great overseas opportunities. And it's really, really hard for angels to find access to good deal flow overseas. That takes a lot of work and a lot of time. And there's a lot of compliance issues and regulatory issues. So we can bridge that gap and package all that up really nicely. And then I think another big one is just skin in the game. Our intent is to really put our money where our mouth is, and invest a decent percentage or a greater percentage per deal than a typical syndicate would. So we're really backing it. We're in it with you.
And that is what's special about our syndicates. Everyone who is running a syndicate on Aussie Angels is putting their own money into each deal that they put forward, because that kind of skin in the game, put your money where your mouth is, I think is really important. And I like to follow people that I trust, and everyone on this call absolutely falls in that bucket. And one more question for you, Danin. If they invest via the syndicate, could there be an opportunity to connect with the founder and potentially add higher value as well?
For sure. Yeah, for sure. So that's a key part of it. So where founders benefit is they have one entity on their cap table, or on their, on their share registry, which would be the entity that invests via Aussie Angels. So it could have 10 or 20 angels sitting in that special purpose vehicle or SPV. So founders, that's a really great benefit, because they can only have up to 50 entities on their cap table before they have to change structure and declare themselves a public company, which is complex. They don't want to have to manage that. So we consolidate that all onto one. So that's the benefit for a founder, but they also still get access to all the investors in the SPV, the entity that invests in them. So we really will make a point of going, what is it that you need? Do you need access to, do you need introductions somewhere? Do you need someone who's an expert here? And then we can reach out to the investors and say, does anyone have this expertise, or does anyone have a contact here? And so really it becomes very kind of self-fulfilling and, you know, like a positive, like a virtuous cycle. So it's like, as I mentioned, it's a great way for investors to get access and get into certain companies as well. I've done it in companies I've invested in through syndicates. I have contacted the founders who didn't even know I invested, because I invested through a syndicate, and arranged a meeting with them and went and had a chat and said, hey, I'm an investor in your company. Can we go and have a chat? It's a great way to open a door, get involved.
And Alex, what are you most excited about for this syndicate?
Yeah, well, similar to Danin, I think it's great to have the opportunity to effectively write bigger checks at the end of the day, right? So we're able to sort of combine our firepower and then turn around and offer it to all of you, really, quite frankly. And what I love about the syndicate model is that there's no obligation. You can sign up, you can look at the deals that we send your way. If you like them, you invest. If you don't, you continue, you know, your own merry way. So I'm a big fan of the business model. I've done quite a bit of syndicate investing via AngelList and things out of the US and a couple of Israeli sort of platforms. So thanks, Cheryl. I'm going to flip this on you, and I'm really glad to finally see this available and gaining, you know, speed here in Australia. And you know, it's exciting, sort of in that sense, right? That we can offer what we find to more people at the end of the day.
Simon, is there anything you're excited about other than, you know, tooting my own horn, but working with Alex and Danin?
Yeah, like minds, being able to share knowledge and insights that are, you know, that's one of the great advantages of networking. But I think the point that was raised earlier is just having access to deals that otherwise are too hard to get into. Definitely the last 24 months, I've found it harder to get into some deals.
Awesome. Well, we're coming to the end of our session today. I hope everyone has gotten a ton of value. We will send out the link so you can apply to join their syndicate. I'm part of it. I'm excited to see what deals come through. And I believe you are working on one that's coming up pretty soon, right, Danin?
Yeah, we're going to launch one in the next couple of weeks. So we've got, and then hopefully try and get to at least 6 to 8 a year. And then as we build it more, it's a lot of work. So there's a huge amount of work in vetting deals and doing diligence, meeting with founders, all that sort of stuff. So as we build it and build a team and get more people, we'll be able to bring and get more investors on the platform. It becomes a network effect and it becomes better for everyone. So that's what we're looking to do over time.
Awesome. Well, I can't wait for the first couple of deals to come through. So if no one has any other questions, if you do, I'm sure you can reach out to any three of the guys here today. They're fantastic. Thanks so much for your time, everyone, especially Simon, Alex, and Danin. Really appreciate you taking time out of your day to share some of your insights and tell us a little bit about the syndicate.
Great,
That's
Cheryl.
it for now.
Thanks for hosting.
Yes, thanks, Cheryl.
Thanks, everyone.